Hi there, welcome to Kneppyinvests. Time for monthly state of the markets video. I was going to record this about a week ago, February 14, but I've decided to just delay it by 1 week. No reason behind that, but very interesting state of the markets right now. And in this video, I'm going to be looking at the XGO, Nasdaq, S&P 500, Russell 2000, XSO. Also have a look at gold. So I don't usually look at commodities in these videos, but gold looks like it could be trying to break out. And if it does break out, that would benefit me because I do have a few gold companies in my portfolio. And if I do see confirmation of the breakout, I'll probably add some more gold companies to my portfolio because quite a few of the gold companies on the ASX have seen share price fall by a fair bit over the past year. Also have a look at the bond market. And the bond market right now is in an interesting state. In fact, we've seen the bond market go through one of the biggest, longest bull markets in history, a 40-year bull market, and that could be turning around as well. But in these videos, the first stop is always looking at the past to see where we were 1 month ago in regards to the XJO. 1 month ago, January 14, I was probably neutral at this point in time. And the reason I say that is I did have the XGO trading in this range between 71.50 and about 76.50. And on December 17, which was the time of the previous video, we were right in the middle of that, or just below the middle. And then on January the 14th, we had seen the XGO actually go up in that previous month. And we were almost right smack in the middle of this range at 73.93.9. No real trend at this point in time. In fact, the XGO is just going sideways, so it's neither bullish nor bearish. If we went below the bottom of the range, that would turn me a little bit more bearish. And if we went above the top of the range, that would make me a little bit more bullish. Well, let's have a look and see what happened over the next month from January 14. And all charts in this video will be to the end of trading on February 18, including the American markets. I just realized the American markets are going to be closed on Monday, the 21st of February, which upsets me a little bit. I am doing 2 night shifts, and one of the things I love about the night shift is I am awake when the American markets are trading. Anyway, so the XGO to February 18 did fall and finished at 72.21.7, but during this period and just after I did the previous market update video, we did see a massive sell-off in the XGO, and it fell well below the bottom of the range. So I went from being neutral to being a little bit more bearish, particularly when it fell through that bottom of the range. I did go to a little bit more to cash, but we did see a nice recovery in the XGO after that from the end of January into the middle of February. We didn't get back to the previous level, but the only problem is over the past about 6 or 7 trading days, we have seen the XGO go sideways and a little bit of volatility in there as well. Now, this does not include trading on February the 21st. And at this point in time, I am recording this 1 hour after trading has begun, and the XGO is down another 1%. So we're getting towards that bottom of the range. So even though I've kept these range lines in there, we have broken that range. So it's really not appropriate to have these range lines in there because I think we have moved potentially into a downtrend. We have tested the moving averages, which is the 50 and 100-day moving average, and the XGO has failed to move through. In fact, on 2 days, we did see the XGO move above those moving averages, and a lot of selling came in, which shows me there's not much strength in the XGO right now, and there's actually more sellers trying to take advantage of any sign of strength. And at this point in time, yeah, a little bit more bearish in regards to the XGO than I was 1 month ago. Talk about being bearish, I have to say with the Nasdaq, massive amounts of bearism, if that is a word, in regards to the Nasdaq. And I have 2 lines here, but one line is resistance, which is the top line. And then the Nasdaq did reach the resistance line twice. And the second time it tried to reach the resistance and failed, really was the end or possible end of the uptrend, because the very definition of uptrend is you need higher highs, higher lows, and because we failed to get past that previous high, which was reached in November, and that previous high was in December. That was a sign that there was a little bit of weakness in the market. And then over probably almost for the full month of January, we did see the Nasdaq fall. In fact, it fell from about 1640 to almost a low of 14,000. So significant shift in sentiment during January with the Nasdaq. And in fact, I'd say the Nasdaq has moved into a downtrend. We did see a bit of a dead cat bounce, and that dead cat bounce failed to show any strength in the Nasdaq. And then over the past few weeks, we have seen the Nasdaq fall back towards support. Now, the reason I'm calling that line support is if we go back to April last year, we did see the Nasdaq get to that resistance level at that point in time, pull back, and then in June of last year, where the Nasdaq tested that support level, which was resistance at that point in time, about 5 days in a row. So when you do see a stock or an index test a line, a support or resistance line for 4 or 5 days, it's just testing the strength of that line of support or resistance. And then it started to go up higher towards the end of June. So that line of resistance then became support. And that's why I'm saying that's support right now, because we're testing that old resistance level right on 14,000. We tested it at the end of January, and on 2 days we actually went below that support level, and a lot of buying came in and pushed the Nasdaq above that support level. And right now the Nasdaq is sitting right on that support level. And I was going to say trading on Monday will be very important. If we see the Nasdaq fall well below that support level on strength, that will be a very bearish signal. But we're going to have to wait one extra day. So a very interesting trading on the Tuesday with the Nasdaq, because if we do see a lot of selling and that support level broken, that would be a very bearish move. Not quite as bearish as the Nasdaq is the S&P 500. And I've just put one line of support here, and that support level was reached in September, late September, early October at about 4,300. And during the overall weakness in the market at the end of January, we did see the S&P 500 reach that support level. And on 5 consecutive days, that support level was tested by the market. You can see on those one-day candlesticks, there's a long tail, or a bit of a tail anyway, on 5 consecutive days. On one of the days, it fell quite a bit through that support level, and then a lot of buying came in. And then when that support level really was confirmed as being support, that testing failed, then we did see the S&P move up a fair bit over the next 5 trading days. But that dead cat bounce, if you want to call it that, or that move up, was fairly weak, and that's why the S&P has dropped back down towards that support level. And again, just like the Nasdaq, if we do see the S&P 500 fall through that support level on fairly good strength, high volume, that will be another bearish move. Now let's talk about the Russell 2000, and this is going back to January 14. And if you don't know what the Russell 2000 is, it's just the smallest 2,000 companies in the Russell 3000, and the Russell 3000 is looking at the 3,000 biggest companies by market cap on the American market. So these are the 3 largest publicly traded companies on the ASX, the 3,000 is, and the 2,000 is just minusing those 100,000 biggest companies. And why I was interested in the Russell 2000 is you could sort of assume this is sort of like a small cap index. And over a period of almost 1 year, the Russell 2000 was going sideways. And this sideways movement began in February 2021 and continued until my last video on January 14. And that support level right at 2120 was tested about 6 or 7 times during that period. And each time the market tested that support level, we saw it rebound. And the last day, or the day I did that video, was the last time it tested it. We saw a bit of a tail on the downside to the one-day candlestick, which showed there was a little bit of strength to the Russell 2000. So let's see what's happened with the Russell 2000 over the past month. And funnily enough, the day after I did that video on January 14, the Russell 2000 fell through that support level on strength. It just went straight through it, didn't even come back, no buying on that day. and that support level then became resistance. The Russell 2000 has tried to test that resistance level, but fell well short, and it has started to fall again over the last few trading days. So this is another bearish index right now. So the bottom 2,000 companies in the Russell 3000 are looking fairly bearish right now as well. So bearishness when you look at the Nasdaq, S&P 500, and even the Russell 2000. So all the indices in America are looking fairly bearish right now. Australia has its own small cap index, and that's the XSO. I'm not sure what the parameters are to be included in the XSO. But anyway, this is a fairly similar signal to what we've been seeing on most indices in America, in Australia. Now, I actually did have a look at the German index, and that's not looking bearish at all. I think even the FTSE is not looking bearish. That's the last time I looked at it. So even though some indexes around the world are looking bearish, there are some that are still looking at least neutral and also even possibly a little bit bullish. Anyway, the XSO is fairly similar to the XGO. We saw that massive move in late January. In fact, the XSO fell from 3,400 to about 3,080, and then there was that support level at 3,080, and it's a fairly weak support level. And the reason I put that in is because we saw that level reached back in about 8 or 9 months ago, and then it tested again and has pulled higher, and there is a possibility we might test that again at 3,080, and if we fall through that support level, that would be a fairly bearish move, but we're still a fair way away from it, about 3,000 or 2,100 points at the end of trading on February 18. But again, just like the XGO, XAO, the XSO is looking quite bearish right now. Now to gold, and maybe I should do one video dedicated to gold itself, because gold has been going sideways for about 18 months. Now this is the chart, the one-day chart for gold going back to July 2020, when we did see an uptrend come to a completion, and we have been seeing the gold prices go sideways. But there is a sign of a bit of an uptrend, which has developed since March last year. Fairly weak uptrend, but it's definitely signs of it there, and there is possibility we might be seeing a bit of a breakout in the gold prices right now. One of the things I do look for is, particularly when I'm just looking at the 50, 100-day, 200-day, 25-day moving average. So I don't include all the moving averages on some of these charts. Actually, most of these charts is because it looks a little bit too messy. So I've just included the 50 and 100-day. And one of the things I look for is sort of the moving averages coming together, which is suggesting there's a lower volatility in a stock, a company, which is the same thing, a commodity, or the markets. And usually when you do see lower volatility, eventually you will see higher volatility in the end. And hopefully that high volatility will see the share price take off to the upside. And that's what we could be seeing right now with gold. We've gotten past the previous high, which was in November, and the two moving averages are starting to go up as well. And the other previous high we have to get through is the one we saw in May. And if we get past that, I think we could say that gold is in an uptrend, which does look really interesting because a lot of companies, gold companies on the ASX, have been in downtrends for about 12 to 18 months. And this could be a possible buy signal right now when it comes to gold. Now to government bonds, and this is something I don't usually look at, because the bond market has been in the greatest bull market of all time. That is not my wording. I have heard that quite a few times, and this is the US 10-year government bonds going back to 1981. And government bonds have been going down throughout this period, a well-defined downtrend in government bonds. And you might be saying right now, how is this the greatest bull market of all time if government bonds have been going down? Well, there is an inverse relationship between the yield of bonds and the price of bonds. So if the yield of bonds are going down, which this is portraying, that means the price of bonds is going up. So the price of bonds have been going up over the past 40 years. And I can confirm this when we look at the next slide, which is looking at the ETF of government bonds. And it's been going up over the past 20 years. It doesn't go back 40 years. And the best way to explain this is probably using an example. I've never tried to explain this in person. So just imagine many, many years ago, you bought a government bond at 8%, so it's $100 at 8%. And when you do buy a government bond at 8% yield, that yield does not change at all. So even though the interest rates might come down to 4%, 2%, that government bond yielding 8% remains at 8% yield. So you have this $100 bond that's yielding 8%. And just imagine interest rates go down, and instead of issuing government bonds at 8%, they issue it at 4%. And then someone comes along and says to you, I'll buy your $100 government bond at 8% yield for $100. What would you do? Would you accept that or not? Of course, if you just look at it logically, you would not accept that at all. You would tell that person they're crazy. You might say to them as a counteroffer, I'll sell you that $100 bond at 8% yield for $125 because it's yielding 8%. And the best way to say this is if you actually did sell it for $100, 8% yield, what can you do with that $100 in terms of yield, in terms of bonds? Well, you can turn around and then buy another bond, $100 at 4% yield. So instead of getting $8 per year, you're getting $4 per year. Why would you do that? So the only way you can balance the difference in the yields is to sell the government bond with 8% yield at a higher price, higher premium. And that's why if interest rates go down and the yields of bonds go down, the price of bonds actually go up. And to confirm that, and by the way, the chart in the previous slide was a monthly chart, and this is a bond ETF, a 10-year bond ETF called the TLT, and this ETF has been going up over the past 20 years. It goes back to 2002. So you can just see an inverse relationship between the bond yields and the bond prices through the 10-year bond yields in the previous chart and this bond ETF. Now, you can't really see it in that 10-year bond, American bond chart because that was the monthly chart. If we look at different time frames, and this is the Australian 10-year government bonds, we have seen possible signs of a shift in the trend and sentiment of this area. So this goes back to 2008. And the Australian government bonds 10-year has been in a well-defined downtrend. There have been periods of time here where it looks like the trend has been shifting back in 2012 to 2013, but that failed. There was a period of time during 2017-18 when the government bonds just went sideways. But looks like the trend has shifted over the past few months. Looks like we did get a golden cross in the moving averages. This is the 100-week and the 50-week moving average. And the previous time the 10-year bonds were this high was way back in the beginning of 2019. So it does look like there is a potential shift in the trends of bonds, which means the prices of bonds will be possibly starting to go down right now. And I just want to show you Australian 10-year government bonds. This is the monthly chart, just like the American chart. And this goes back to 1982, so very similar to the American. This has been just a long-term 40-year bull market when it comes to bonds. If you bought bonds way back in 1983, you would have done very well in this market over that period of time. And really no confirmation when you look at the monthly chart that the trend has shifted. Moving average is still going down, but when you look at the weekly chart, you do get a little bit of a different story. So sometimes I do like to look at different time frames, looking at the monthly, weekly, and daily chart, because you do get different perspectives when you look at those different time frames. Now, something really interesting was, and this is probably the most interesting bond chart I did see, and this is the Japanese 10-year government bonds. We had been seeing the bonds going sideways for about 6 years. It reached the bottom in the middle of 2016, sort of touched that bottom in the middle of 2019, sort of a double bottom there, and then the bonds have been going sideways over the past 2 years. But we've just seen the bonds recently take off. In fact, it's about a almost 7-year high when it comes to the government bonds. So it looks like there is a really good breakout, fairly strong breakout when you're looking at the Japanese 10-year government bonds. And of course, when I'm talking about breakouts in the bonds, you have to think inversely for the price of the bonds. So this is actually bearish for the price of bonds, bullish for the government bonds, bearish for the price of bonds. Now to something that did intrigue me, not intrigue, but I did find interesting. This is Ethereum. You're going back to February 2021. And from February 2021 all the way through to about October, November last year, Ethereum was in an uptrend, reached a high of 4,800 in, November of last year, but has been dropping ever since. Then it fell all the way from 4,800 to 2,200, so lost more than 50% of its value over about a 2 or 3 month period. And then we did see a little bit of a dead cat bounce. It went from 2,200 to 3,200. A nice little return if you were able to take advantage of that bounce. That's almost a 50% return in a very short period of time. But over the last 5 trading days, as investing.com will tell you, Ethereum has fallen 15%. But sometimes you just got to look away from the title of an article. So even though it's gone down 15% in the last 5 days, it is still quite a bit higher than it was just 2 months ago. So right now it's at 2,600. 2 months ago it was about 2,200. So always look past any sort of title, particularly if it's fairly bullish or negative or positive, and just dig a little bit deeper. You don't want to fall into the trap of just reading a title at face value and then acting on that title. That's all I have for the state of the markets this month. If you do have any questions about the state of the markets, the Nasdaq, XJO, XSO, I'd love to hear your opinions. Maybe you think I'm completely wrong and you're absolutely bullish right now. You think this is the greatest time in history to take advantage of this little bit of weakness in the markets, and you think the markets are going to be 50% higher in 1 year. I'd love to hear different opinion than my own, because I could be absolutely wrong. Hope you've also enjoyed a little bit of a discussion on bonds. I would not say I'm an expert on bonds at all, and if you do know more than me, I'd love to hear your opinions as well. Last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.